Smart. We continue talking about the rise in mergers and acquisitions now with an arbitrage investor actively involved in that market. Nancy Havens-Hasty is president of New York-based Havens Investors. Her firm owns shares in Global Crossing, American Medical, and NYSE Euronext, all current targets of acquisition. So you've been pretty busy.
We have. I've been very busy.
So are you surprised in terms of how these deals are playing out at this point?
Well, no. There had been a long time rumored extra set of bidders for New York Stock Exchange, so we actually didn't even short the Deutsche Börse, even though it's a stock-for-stock deal, and we normally would do that because it wasn't 100% clear to any of us that it was going to be the winner. So we were not at all surprised when Nasdaq came in, and it's very interesting right now. I mean, they have a much superior offer, and I wonder how New York Stock Exchange expects to get their shareholder vote right now, with the other offer being so much higher. So it is interesting. It's really interesting.
Do you short, do you typically short the buyer, the suitor?
We short it when it's a stock-for-stock deal. We wish we had shorted Community Health today, but it was a cash deal, and so we were it had a small stock component that wasn't going to be determined until the end, and so in Tenet Health, Community Health, where there were some rather large problems today having to do with accounting, accusations of accounting inaccuracies by the target who doesn't want to be acquired. That stock was down. Tenet and Community were both down, with Community down a lot more than Tenet.
Now, level 3, you were shorting level 3, right?
We own Global Crossing, and we're short level 3 as of today. The deal was announced today. And we normally try and play just the spread.
Okay.
We don't want to play the stock market. We just want to play the spread.
So what's the best spread out there? Because some of them aren't. We're not seeing a lot of spread here, right?
Well, there are
Endo Pharmaceutical, for example.
Another 6% spread. It started out at a 4% level, and we finally, when it got to 6, started buying it. The annualized returns are not that big, but there are lots of overbids and lots of bidding wars. So, for example, in 3-par, which I know we talked about many years ago, when there was a $24 bid from Hewlett-Packard, we bought it at 26, which is a 10% overbid, and we got 33 for it in the end. So ARBs are making money mostly on bidding wars right now. And there are a few situations that are quite sexy, like Talecris, Grifols, which have antitrust problems and have very large spreads, which you can play carefully and small.
But you have to be careful, right? I mean, you say that this isn't the kind of market that your average investor should wade into. You need to be in this game all the time.
When there are when there are deals that have very big spreads, there's a reason for the big spread, and it pays at that point to either get rid of your stock if you're a normal investor, or to put it into the hands of somebody who really has done this 1,000 times before.
So what do you advise investors at this point, Nancy? When you look at, many of the folks that come on say they expect more deals, the deal environment is kind of back here. So what is your advice to them?
Well, generally, if they are very used to dealing in a merger environment and they've done it for a lot of years, maybe they don't do it all the time, but they've done it on and off for many years, you can have a fairly large diversified portfolio, and your higher risk deals should be smaller and your lower risk deals should be bigger. That's sort of a general rule. If, however, you're the person who's generally a long-only investor who suddenly is lucky enough to have something in their portfolio that becomes subject to a takeover, the deals are riskiest at the beginning, generally. And so generally, my advice to that kind of an investor is to divest part of their holdings, part or all of their holdings. And if they want to keep it, make sure they lock in a certain amount of profit that comes from their initial very good luck.
I want to take
every situation, however, is different. You know.
Let me ask you. We only have 30 seconds left, but I want to ask you about the volume situation, because it's been so weak lately that we're kind of tired of saying it. But there's a lot going on in M&A. There's a lot of cash out there, so that should continue. What's it like in arbitrage? I mean,
it's terrific.
Is there a lot of action?
There's tremendous amount of action. We have bigger and bigger deals as time goes on. Corporate boards are getting more and more confident, and they have no place someplace else to put their cash. Their stock's gone up a lot. They're not as interested in buying back their stock. They can increase their dividend. That's sort of a ho-hum use of cash. They can invest their cash at 1%, 2%. That's not particularly interesting. They can also build a new factory, but that's much more risky than buying a company that already has revenues.
So expect more deals to come, no doubt.
Absolutely.
Good stuff. Nancy, thank you as always. We appreciate it.
You're welcome.